competitive as well. There are a lot of people who can put up big limits, not as much as we do, but they can syndicate a program and put up $1 billion very easily. So that competitive advantage we still have, but it's no longer as big a deal as it used to be.
This question comes from a shareholder in Scotland who wants to know Warren, Charlie, and Greg's views on how Kraft Heinz has performed over the last 12 months compared to the disappointing performance pre-COVID. And what are your current and longer-term views on Kraft Heinz prospects?
Well, I think that Greg's on the board, so I don't know that we're in a position to give advice on Kraft Heinz. We do, we entered in effect a semi-formal partnership with 3G many years ago when it was just the Heinz deal, and then went on to acquire Kraft with our partners, and they've done more than they hold up their share of things, and we do what we said we do going in, which is to be a financial partner, and they're more of the operating partner, although we participate to a degree in any big decisions, and they would listen to us. But we're not making any in terms of Kraft Heinz stock. That's up to somebody else to evaluate.
Yeah, the only thing I would add, Warren, is I think we're very comfortable with the fact that they put a strong manager in place in Miguel, and he's put a very good team in place at Kraft Heinz. So we're pleased with the leadership and management team in place. They're very focused on how they're executing as they've gone forward and rationalizing their capital structure and managing down their debt structure. So very pleased with the path forward with the existing management team.
We feel better about this is a more general subject, but one of the subjects I might write about in one of the future annual reports is the problems caused by the myths that people have about their own organization. And I've seen that so many times in various forms. And to some extent, the problem has become accentuated in the last 20 or 30 years because the CEO often and works with the investor relations, but they say, well, we have to have constant contact with the analyst community, and of course, so they go on every couple of months and they repeat certain things about their company, and it becomes part of sort of the catechism. And nobody's going to go on 2 months after the CEO has said one thing and say, well, actually, that really isn't the way. They're not going to contradict themselves or change course. And so if you get these myths, and they can occur in a lot of different ways. I can give a lot of examples, which I won't do. As I tell my friends in corporate America, I really am not going to squeal on them. But there's a lot of mythology that gets handed down from one CEO to the next. Can the succeeding CEO say the guy that picked him, was on the wrong course, or he's been telling you something that isn't really quite true? He can't do it, And then he starts repeating it, and it leads to enormous errors. But it's hard to tell the story without giving examples, and I don't like to give examples. So we'll see whether I write about it sometime. Charlie, you probably got some thoughts. He's had a ringside seat at a lot of. He's been on boards that I haven't been on. I mean, and it doesn't just extend to business. It goes beyond that, into education and to, a lot of areas.
What's really interesting is the way you prattle out all the time. You're pounding back in even if it's wrong. And so one of my favorite remarks in the history of human remarks was by Sir Cedric Hardwicke, who is a great British actor. And he said, I have been a great actor for so long that I no longer know what I truly think on any subject. And I think that happens to a lot of people. And it happens to virtually every politician.
And it gets embedded in corporations.
And
the trouble is now the CEOs speak out so often, so if they've got some crazy thing that they're saying about their company and they keep repeating it, the subordinates aren't going to contradict it. And Charlie said they just believe it after a while, and it's dangerous.
Yeah, and of course the young people get these ideas after their liberal educations. Think that God has given them direct insights, and they're just as crazy as the politicians.
Now, there's some old people that have them too.
Yeah, well, the old people are already crazy, but
they're going to die sooner. So
we have our old insanities. The new insanities are the young get.
All right, this question comes from Bill Begley, who said, could you tell us what happened to the joint venture between Berkshire, J.P. Morgan, and Amazon to investigate what could be done about the current state of medical health care in the United States? The only item I read was that it was disbanded. Do you have any lessons to be learned from your effort?
Well, we learned a lot about the difficulty of changing around an industry that's 17% of GDP, and where we accomplished a lesser objective, which was probably more important to us even than either J.P. Morgan or Amazon, because we knew less about our own system than they did. They knew that there were more centralized operations. So we got some benefits in the sense that we looked at 60 or 70 different operations we had presently, and that's one case where a certain amount of centralization, at least in certain aspects of it, can save real money. I mean, we found inefficiencies, and like I say, we probably saved more than the other two partners because they knew their situation better. We found some dumb things we were doing, so we got our money's worth. But in terms of the big picture of changing something that so many people have a vested interest in doing, and there's one additional factor to it which is really interesting. There's an ingenious aspect to it. It goes back to a fellow named, which didn't have any direct connection, but Beardsley Rummel. And nobody's ever heard of Beardsley Rummel, but Beardsley Rummel in 1941 came up with the idea of the withholding tax. So people, instead of April 15th having to write a check and thinking how much they hated their politicians and hated the government and everything else, they actually looked at it as kind of a Christmas club, and there were overpayments involved, and they actually got a check when the final payment came due. So when you aren't writing the check yourself, you may know that the health benefit from your company is worth $10,000 a year to you, or $15,000. It may cost them that much, but it may cost the company that much, but you don't see it. So the company pays it, and most of the people in that waiting room sitting next to me, when they are not sitting there thinking about whether I can afford to do this, or what's this going to do. They're generally under some kind of a plan, not always, obviously, but they don't think that if the company wasn't paying them that, they could pay them to that in additional compensation. But of course, the weird system is the company gets a deduction if they pay it, but if you pay it yourself on a policy, I don't believe you get a deduction. So it's something that's most of the people are not seeing as a cost to them, and they like that pretty well.
No kidding.
Yeah, well, but that's true of the federal income tax. I mean, it was an act of genius from the standpoint of the government to go to a withholding system, and if you didn't, just think of how many people on April 15th would have to sit down and write a pretty good-sized check, and they'd be mad. They wouldn't like it, and they don't feel it now. So we were up. That's an obvious point, but you also, people like their doctor in general, and they don't like the fact that it's 17% of GDP. But one is just kind of a amorphous sort of thing, and the other is very, very real to them. And the most prestigious people in the community are on the hospital boards, and a lot of people that are fairly happy with the system. So we did not make inroads on that, and we are paying 17% of GDP for health care, and no major country is more than 11%. And in the pandemic, we've had a death rate or a death total as the percentage of population that's way higher than the rest of the world. Not every single country, but way higher. So we've laid out more money and gotten a poorer result in terms of this particular pandemic in terms of deaths per capita. Now, that may not turn out to be the...
Oh, Warren, even though you shot it and missed, you were at least shooting at an elephant. The cost of health care in Singapore is 20% of what it is in the United States, and their medical system works better. So you were shooting at a huge elephant. But as you found out, it's very hard to people to get very enthusiastic about losing part of their income.
Oh, yeah. No, I said we were fighting a tapeworm.
Yeah.
In the American economy, and the tapeworm won.
Yeah, the tapeworm.
Yeah.
That's good, wonderful phrase, the tapeworm. I'll have to copy that.
Well, it wasn't a phrase we were looking for.
This question comes in from Mark Blakely in Tulsa. This is for Warren and Charlie. When we discuss Berkshire, we often focus on the insurance operations and the largest non-insurance businesses, the Redwoods, as you mentioned, in 2019. However, Berkshire owns a large number of subsidiary businesses, most of which are never mentioned. Is there a point at which Berkshire becomes too large to manage? And should we have any concern over the lack of information from most of Berkshire's companies? Is there a time that could come when Berkshire's too large and complex?
Well, it's too large to do certain things, that's for sure. I mean, we can't spend our time looking for $100 million acquisitions. But we have a wonderful company in Fort Worth, and we had a marvelous man running it, and he died recently. But he ran it. He sold it to me 15 years ago, and he just basically ran it, and I couldn't find my way to the company. I mean, we've got this terrific company that makes recreational vehicles, Elkhart, based in Elkhart, Indiana, and we bought it 15 years ago. I've never been there. Maybe there's some guy in a closet just making up numbers to send to me every month. But I feel I understand the business pretty well, but I've never seen it. And the fellow that runs it likes running it, and he likes me keeping my nose out of it, and he'll let Greg in a little more than he'll let me because. but we've got a system that will work with wonderful businesses and wonderful managers, and it's up to us to find them. But it's also us to nurture them when we find them. And if you get somebody like Paul Andrews, who ran TTI, and who built it from nothing, absolutely nothing, nobody ever heard of him, and the earnings have octupled during the period that he ran it for us, and he was happy, employees were happy, he was a wonderful man, we were happy, and I would call him at the end of the year and I'd say, Paul, this place you're shooting the lights out and everything, and you should take a raise. And he said, or bonus, or what. He'd say, well, we'll talk about that next year, Warren. I mean, he just loved the business. I love Berkshire. He loved the business, and I wasn't going to add anything by having him fill out a bunch of reports about how much he's using in the way of carbon or anything. It's ridiculous to think of a guy like Paul Andrews behaving in an antisocial manner or anything of the sort. And we'd love to have more of those. And obviously, as we get bigger, they get harder to buy. But we've got a number in the place, and I don't think we bought our last one over time. But I certainly don't see anything in the near future at all. But we're intensifying our interest a little bit in the ones we have by repurchasing shares. So our shareholders own more of those companies every year while we're assuming we're repurchasing shares, which is price sensitive. Charlie?
Yeah, I don't think we're getting too big to manage because we're different from practically every other big corporation in the United States in that we are so excessively decentralized. We have decentralized so much, and we have so much authority in the subsidiaries that we can keep doing it for a long, long time, as long as it keeps working. And I would say so far that our decentralization has caused more benefits than defects. but nobody seems to copy us.
Well, but that's absolutely true. But I would say this: decentralization won't work unless you have the right kind of culture accompanying it.
Yeah, but we do.
Yeah, we do. But it's dependent on it.
And Greg will keep the culture.
If we had a culture of people who are trying to make a lot of money for themselves in the next 5 years at the top, it would not have worked.
No, of course not. And the culture is part of it. But assuming we keep the culture, it can go on quite a ways.
For a long, long time.
Long time. In fact, it may amaze everybody. And by the way, the Roman Empire worked as long as it did because it was so decentralized.
Charlie says to me, "You won't know."
Yeah.
This question comes from Kevin Young. It's for Ajit and Greg. Warren spends his days reading, and his literature of choice is annual reports. How do each of you spend your days? What do you read, and how do you review investment decisions?
Well, in my job, I spend a lot of my time reading deals that brokers and people send us, reading what they're proposing, trying to analyze them, having a point of view, whether it is something that is of interest to us or not. I might add, I do not spend a lot of time reading annual reports because I'm not in the stock picking business per se. But in terms of keeping track of what's going on in the insurance business, that's what 90% of my reading is all about. Greg?
Yeah. So generally in a day, what I'm going to focus on when I'm reading is really around our businesses, what industries they're in. I'm trying to understand what our competitors are doing, what's the fundamental risks around those businesses, how they're going to get disrupted. And then it always comes back to, are we allocating our capital properly in those businesses relative to the risks we're seeing both in our business and in the industry. So a lot of time spent on that. And as that knowledge is built, at sharing it back and forth with our management teams of those relevant subsidiaries and sort of fine-tuning it is really the approach.
Both of these fellows can absorb information to an extraordinary degree. I mean, they have, and for one thing, they're terribly interested in it. I mean, and it's theirs. So I'm amazed at both of them, the degree which they just sort of know everything, and but they enjoy it. I mean, they're not thinking about whether they'll get the next job that opens up at some huge place or anything like that. Nobody leaves us, basically the ones we want, but you really got to kind of be in love with your business, and that makes a huge difference, and that means that we've got to have the conditions that allow that love to flourish, and it wouldn't flourish with many organizations.
This question comes from Robert Miles in Nebraska. The trading apps. What do you think about Robinhood and other trading apps or fintech companies enabling all ages and experience to participate in the stock market?
Well, I'm looking forward to reading the S1 on Robin. That's a big thing you file with the SEC when you are going to be offering securities, and it's become a very significant part of the casino aspect of the casino group that has joined into the stock market in the last year and a half, and I do want to see how they handle the source of income when they say they don't charge the customer anything. I mean, it would be interesting to watch how they describe it. I mean, but they have attracted, maybe set out to attract, but they have attracted, I think I read where 12 or 13% of their casino participants were dealing in puts and calls. I looked up on Apple, the number of 7-day calls and 14-day calls outstanding, and I'm sure a lot of that is coming through Robinhood. That's a bunch of people writing. They're gambling on the price of Apple over the next 7 days or 4 days. There's nothing, there's nothing illegal about it. There's nothing immoral. But I don't think you'd build a society around people doing it. I mean, if a group of us landed on a desert island, we knew we'd never be rescued, and I was one of the group, and I said, well, I'll set up the exchange over here, and I'll trade our corn futures and everything around it. I think the degree to which a very rich society can reward people who now know how to take advantage, essentially, of the gambling instincts of the not only American public, worldwide public. It's not the most admirable part of the accomplishment, but I think what America's accomplished is pretty admirable overall. And I think actually, American corporations have turned out to be a wonderful place for people to put their money and save. But they also make terrific gambling chips. And if you cater to those gambling chips when people have money in their pocket for the first time, and you tell them they can make 30 or 40 or 50 trades a day, and you're not charging them any commission, but you're selling their order flow or whatever, I hope we don't have more of it, I'll put it that way. And I will be interested in reading the prospectus. Charlie?
Well, that is really waving the red flag of the bull. I think it's just god-awful that something like that would draw investment from civilized men and decent citizens. It's deeply wrong. We don't want to make our money selling things that are bad for people.
But we've got the states doing it with the lottery,
No, but that's bad too.
Yeah, I understand.
That's very
but I mean,
bad.
Once you
very bad.
That's
one of the things that's wrong with it. It's getting respectable to do these things. The states are just as bad as Robinhood.
Well, in a sense, they're worse. I mean, they're really taxing.
I know
people based on
I know.
Yeah, they're taxing hope.
Not only that,
and they don't get much in the way of taxes from here, Charlie. When they do that,
the states in America replaced the mafia as the proprietor of the numbers game. That's what happened.
Yep.
They pushed the mafia aside and said, "That's our business, not yours." Doesn't make me proud of my government.
When I was a kid, my dad was in Congress. They had a numbers runner in the House office building, actually.
I will ask this question from Chris Freed from Philadelphia, and whoever wants to take this on stage. From raw material purchases by Berkshire subsidiaries, are you seeing signs of inflation beginning to increase?
Let me answer that. Greg can give more. We're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us. And it's being accepted. I mean, it's not, if we get, well, take home building. I mean, the cost of, we've got 9 home builders, and in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs, just every day, they're going up. And there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. So it's an economy really. It's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when they were allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when when they open them. And, they can't stop people from buying things. And we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either. And we'll wait for 3 months or something of the sort. But the backlog grows. And then we thought it would end when the $600 payments ended. And I think, around August of last year, it just kept going. And it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas. And it just won't stop. People have money in their pocket, and they pay the higher prices. And when carpet prices go up in a month or two, we announced a price increase for April. For our costs are going up. Supply chains is all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket than except for. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit, for a year practically, and that means that the dry cleaner nearest just went out of business. I mean, and nobody's bringing in suits to get dry cleaned, and nobody's bringing in white shirts to get the place where my wife goes. The small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, you've done, same source sales of Dairy Queen are up a whole lot, and they adapted. But it is not a price-sensitive economy right now in the least. And I don't know exactly how one shows up in different price indices, but there's more inflation going on than quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous. And that's just the start.
Greg, you probably are in a good position to comment.
Yeah, well, Warren, I think you touched on it. When we look at steel prices, timber prices, any petroleum input, fundamentally there's pressure on those raw materials. I do think something you've touched on, Warren, and it goes really back to the raw materials. There's a scarcity of product right now of certain raw materials. It's impacting price and the ability to deliver the end product. But, that scarcity factor is also real out there right now as our businesses address that challenge. And it may be some of that's contributed or arisen from the storm we previously discussed in Texas. When you take down that many petrochemical plants in one state that the rest of the country is very dependent upon it, we're seeing it flow through both on price but overall in scarcity of product, which obviously go together. But there's challenges, that's for sure.
This question comes from BJ Corrala. What do you think of quants? Jim Simon's Medallion Fund has done 39% net of fees for 3 decades, which proves that it works. Will you consider hiring a quant lieutenant in Berkshire to work alongside with Ted or Todd?
Well, I'll say no to the second part, and I'll let Charlie handle the first part.
Well, that's rather interesting. The leading quant fund did fabulously on the short-term trading. They found little algorithms that worked to make them, they had predictive value, and as long as they kept working, they just kept doing it, as long as the money kept coming in. When they got to using the same system, just to finding some little algorithm and trying to do it mechanically for long-term stock predictions, the record was not nearly as good. And in the short-term stuff, they found that if they tried to do it too much, they destroyed their own advantage. So there was a limit on the amount they could make.
But they were very, very smart.
Yes, they got very rich.
Very, very smart. And
very smart and very rich, yes. And very high grade, by the way.
Yeah.
Jim Simons.
But we're not trying to make money trading stocks. I mean,
no.
The answer, we don't think we know how to do it. I mean, it isn't. If we knew how to make a lot more money trading stocks, we'd probably be trading stocks too. But we don't know how to do it, and we really don't trust anybody else to do it for us. That's simple.
This question comes from Richard Warner. Mr. Buffett has espoused for decades the philosophy of buy and hold or hold forever was too short of a time period. Is it a misperception on my part, or has his philosophy changed? It seems to be a much greater turnover in the equity portfolio lately.
I don't think there's that much turnover. I mean, but
No, but there's too much.
What?
There's way too much.
Yeah,
It's still too much in the same amount.
Yeah, I'd agree with that. And the truth is, our businesses are equities. So we own 400 or 500 billion, and maybe more in businesses. We don't turn them over at all. We don't resell businesses. We could probably, well, we won't even get into that, what we could do, but we don't do it. And we do relatively little. And as Charlie says, we'd do better if I'd done less.
This is from Daniel Gauthier. Warren Buffett's 2013 letter in the middle of page 21 made a prediction that in the next decade you'll see lots of really bad news about pensions. Given recent events like COVID-19 and that 2023 is 2 years away, would Mr. Buffett like to comment or revise his 2013 prediction? Did COVID-19 delay, accelerate, eliminate, or not change it?
Well, in a very limited, a terrible way, COVID improves the pension position because the more it's you have less pensioners, but the pension situation is terrible in a great many states. It's not so bad at the corporate level, and there's some multi-employer plans obviously that have got problems, but basically it's a terrible problem for the states, and of course some states, and states are going to go to Washington now and say, we all want to get a lot of money because we had these terrible things happen to us during the pandemic, which they did. But some of those states have enormous pension deficits, and they'll come again if they get a check once. It may turn out to be a federal obligation de facto or something than a state situation. It has not gotten better. It has not gotten better at all, and obviously, and to a certain extent, the pension managers get more and more desperate as interest rates go down. So they'll listen to almost anybody that promises them. They've always had that tendency anyway, but they'll listen to people that promise them that they're going to, one way or another, solve their problem for them, and that isn't going to work. So it's a big, big, big problem. And of course, the real problem is, let's just take a hypothetical state that has a huge pension deficit and maybe even has a cost of living factor in it, which is going to really be a killer. And you can move if you're an individual. Charlie won't move to save that $500 million. He was not going to move to Nevada or someplace. But you can move if you're an individual to some degree, particularly if you're rich and old and retired. And you can actually take away an asset from that kind of environment and give it to another state that doesn't really need it as much. So you'll get adverse selection over time. But if you're a company and you put a plant there, you can't move the plant in 5 or 10 or 20 years. So as the taxable base of individuals falls down, simply because people select out of being a part of the population, you can't select out very well as a corporation. So you have to be very careful and think a long time before you go into some state with a huge pension deficit and a declining population, because you're going to be the last man left, and the pensions won't go away. And I don't think, anybody with a short-term outlook doesn't worry about that. Just get me past the next election, and I'm all right on that one. But we don't want to be. We're not going to stick a plant that's going to be around for 50 years in some place where the population gets halved and the richer part gets cut dramatically, even more dramatically, and we still got a valuable plant there, and we got to keep operating, and we're going to, one way or another, it's not going to be a good place to be.
And we're almost out of time, so I'll make this the last question.
That's a good answer, Warren. It reminds me of my old Harvard law professor. He used to say, Let me know what your problem is, and I'll try and make it more difficult for you.
So this one comes from Jan Michael Ottlinger. It's for Warren and Charlie. I have one question, which is inspired by Charlie's mantra: you have to be a continuous learning machine. So here's my question. What's the biggest lesson both of you learned during the last year?
Well, my biggest lesson has been to listen more to Charlie. He's been right on some things that I've been wrong on.
Well, I don't know. If you're not a little confused by what's going on, you don't understand it. It's just, we're in sort of uncharted territory.
Yeah. We enjoy, in a crazy way, actually seeing what happens. I mean, and this has made us halfway through the movie much more interested in watching even more of this. This is an unusual movie, but our basic principles of, we start with the fact we don't want to disappoint the people who left their money with us, and things flow out of that. And we may disappoint people that don't make quite as much money as they want, but we don't. And we've seen it. Some strange things happen in the world in the last year and 15 months, and we've always recognized the fact that stranger things are going to happen in the future. And I would say, if anything, it's reinforced, our desire, to figure out everything possible we can do to make sure that Berkshire is 50 or 100 years from now, every bit the organization and then some that it is now. Charlie?
Well, of course, that's the idea. I think it's pretty likely to work.
Well, we wouldn't have spent 55 years at it unless we did.
Yeah.
Yeah. And Becky, is that the last question?
That's the last question.
Okay, well, in that case, we'll move on to the meeting. The other three fellows here can leave. It's not going to be that exciting, but we've got a script here, even somewhat. I don't like scripts, but not my nature. And one of the proposers for the two items on the proxy is here in the building to present his argument personally, and the other one has recorded it. So we'll get to that in just a minute. But we offered both of them. I mean, they either could record or come, and I'm happy one of them came. So here we go, and the meeting will now come to order. I am Warren Buffett, not that you didn't know by this time, Chairman of the Board of Directors of the company. I welcome you to the 2021 annual meeting of shareholders. Mark Hamburg is Secretary of Berkshire Hathaway. He will make a written record of the proceedings. Rebecca Amick has been appointed Inspector of Elections at this meeting. She will certify to the count of votes cast in the election of her directors and the motions to be voted upon at this meeting. The named proxy holders for this meeting are Walter Scott and Mark Hamburg. Does the Secretary have a report of the number of Berkshire shares outstanding entitled to vote and represented at the meeting?
Yes, I do. As indicated in the proxy statement that accompanied the notice of this meeting that was sent to all shareholders of record on March 3rd, 2021, the record date for this meeting, there were 639,747 shares of Class A Berkshire Hathaway common stock outstanding, with each entitled to one vote on motions considered at the meeting, and 1,335,074,355 shares of Class B Berkshire Hathaway common stock outstanding, with each share entitled to 1/10,000th of one vote on motions considered at the meeting. Of that number, 456,040 Class A shares and 663,442,069 Class B shares are represented at this meeting by proxies returned through Thursday evening, April 29th.
Thank you. That number represents a quorum, and we will therefore directly proceed with the meeting. The first order of business will be a reading of the minutes of the last meeting of shareholders. I recognize Ms. Debbie Busonic, who will place a motion before the meeting.
I move that the reading of the minutes of the last meeting of shareholders be dispensed with and the minutes be approved.
Do I hear a second?
I second the motion.
The motion is carried. Next item of business is to elect directors. I recognize Ms. Debbie Bosanic to place a motion before the meeting with respect to election of directors.
I move that Warren Buffett, Charles Munger, Gregory Abel, Howard Buffett, Stephen Burke, Kenneth Chenault, Susan Decker, David Gottesman, Charlotte Guyman, Ajit Jain, Thomas Murphy, Ronald Olson, Walter Scott, and Merrill Whitmer be elected as directors.
I second the motion.
It has been moved and seconded that the 14 individuals named in Ms. Bosanic's motion be elected as directors. The nominations are ready to be acted upon. Mr. Hamburg, when you are ready, you may provide the voting results from Ms. Amick's preliminary report.
Ms. Amick has reported that the ballot of the proxy holders in response to proxies that were received through last Thursday evening cast not less than 473,474 votes for each nominee. Ms. Amick's report also states that this number exceeds a majority of the number of the total votes of all Class A and Class B shares outstanding. The report also states that the certification required by Delaware law of the precise count of the votes will be placed with the minutes of this meeting.
Thank you, Mr. Hamburg. The 14 nominees have been elected as directors. The next two items of business relate to two shareholder proposals that are each set forth in the proxy statement that can be accessed at berkshirehathaway.com. If you haven't read that, those proposals, just go to berkshirehathaway.com because they're interesting proposals, and the proponents' views are set forth well there, and I think our views are set forth, and I welcome you reading it. To get back to the script, the first proposal requests that the company publish an annual assessment addressing how the company manages physical and transitional climate-related risks and opportunities. The directors have recommended that the shareholders vote against the proposal. I will now recognize Tim Youmans, a representative of Federated Hermes, to present the proposal. I think we're connected up with Mr. Youmans.
I thank the chair. I thank the chair of the board and fellow shareholders. I'm Tim Youmans, lead North America, EOS at Federated Hermes. Here today on behalf of item 2 co-sponsors Federated Hermes, CalPERS, the California Public Employees Retirement System, and CDPQ, Caisse des Dépôts et Placements du Québec, and our combined millions of ultimate beneficiaries. For well more than a year, the parent company has been unresponsive to the co-sponsors' requests to discuss the parent company's lack of climate-related financial disclosures. In order to have some kind of dialogue with the parent company, we have co-filed a proposal that Berkshire Hathaway's board issue a report annually assessing how the company manages physical and transitional climate-related risks and opportunities, including climate-related financial reporting where material for subsidiaries and for the parent company, how the board oversees climate-related risks for the combined enterprise, and the feasibility of the parent company and its subsidiaries establishing science-based greenhouse gas reduction targets, consistent with limiting climate change to well below 2 degrees. We ask that the annual assessment follows the recommendations of the Task Force on Climate-Related Financial Disclosures, TCFD. The board argues that since it manages its operating businesses on an unusually decentralized basis, and there are few centralized or integrated business functions, the board believes that the shareholder proposal is inconsistent with Berkshire's culture. The co-sponsors note, despite Berkshire's culture and decentralized management, shareholders can only purchase shares in the combined parent company entity. Shares cannot be purchased in the individual subsidiaries that may or may not have the climate disclosures that the board cites in its opposition statement. The company has more than $100 billion in cash equivalents. The co-sponsors and many in the $54 trillion Climate Action 100 Plus investor coalition want the parent company to put more resources into sustainability and in mitigating the financial impact of climate change and the energy transition. The company's sustainability website consists only of links to 15 subsidiaries. We note the parent company has 60 subsidiaries. This is insufficient disclosure to shareholders who think that sustainability risks, especially climate risks, may be material to the parent company's long-term future prospects. Of course, recognizing the company's strong past financial performance. No doubt, climate change and the energy transition to a low-carbon economy pose a systemic risk to the economy. The company's auditor, Deloitte, says on its website, climate change is not a choice, it's billions of them. We are all compelled to act. Deloitte does not assess climate change-related financial impacts in the company's audit. When asked by the co-sponsors why climate change impacts are excluded from audits like Berkshire's, Deloitte failed to provide any meaningful reply. In his new book, former Berkshire director Bill Gates says companies accepting more risk is needed to avoid climate disaster, and shareholders and board members will have to be more willing to share in this risk, making it clear to executives that they'll back smart investments even if they don't ultimately pan out. This is the Gates position, and the chair is one of 3 Gates Foundation trustees. We asked the board to take the cultural risk for a modest degree of centralization needed to issue the annual climate-related financial assessment. We all need to take action now to limit climate change impact on our long-term sustainability. We strongly urge Berkshire Hathaway shareholders to support Item 2 as climate risk may be material to the parent company. And we have a question for the chair. Will you please change your mind and vote your personal shares in support of Item 2? Thank you.
Thank you, Mr. Humans. The proposal is now ready to be acted upon. Mr. Hamburg, when you're ready, you may provide the voting results disclosed in Ms. Amick's preliminary report.
Ms. Amick's report states that the ballot of the proxy holders in response to proxies that were received through last Thursday evening cast 131,376 votes for the motion and 385,336 votes against the motion. As the number of votes against the motion exceeds a majority of the number of votes of all Class A and Class B shares properly cast on the matter, the motion has failed. The certification required by Delaware law of the precise count of the votes will be placed with the minutes of this meeting.
Thank you, Mr. Hamburg. The proposal fails. Second shareholder proposal requests that Berkshire Hathaway companies annually publish reports assessing their diversity and inclusion efforts. The directors have recommended that the shareholders vote against the proposal. I will now ask that the audio tape provided by Meredith Benton, a representative as you so, be played to present the proposal.
Hello, I am Meredith Benton. I am speaking on behalf of the nonprofit advocacy organization As You Sow, and I am also the CEO of the consultancy Whistle Stop Capital. I formally move proposal number 3, asking for Berkshire Hathaway to report on how it assesses diversity, equity, and inclusion efforts, including the process that the board follows for determining the effectiveness of its diversity and inclusion programs, and how it assesses goals, metrics, and trends related to recruitment, promotion, and retention. What would it mean if the majority of Berkshire's operating units weren't managing their diversity programs? It would mean that Berkshire companies are missing out on the benefits that an inclusive workplace culture can provide, such as, according to the studies, access to top talent, to good people, better understanding of consumer preferences, a stronger mix of leadership skills, informed strategy discussions, and improved risk management. Best practices in diversity and inclusion reporting exist and are increasingly standardized across companies. Berkshire companies can publish their workforce composition through their consolidated EEO-1 form. This form is already submitted to the Equal Employment Opportunity Commission, so it requires no additional effort on behalf of the companies to collect or reconcile. It is a universally disliked form, but it is standardized, and companies will often publish their EEO-1 along with an explanation of their own internal structures and ways. 72 of the S&P 100 companies publicly share or have committed to share this form. To my knowledge, no Berkshire company currently does. Not one. The release of workforce composition data is akin to a balance sheet, detailing diversity at a single point in time. Just as a balance sheet would, by itself, be insufficient to identify the strength of a company's financials, so too the EEO-1 by itself is insufficient in assessing the effectiveness of DEI programs. The company's inclusion data, the hiring, retention, and promotion rates of diverse employees must also be shared. Investors need to have a full understanding of the actual experience of Berkshire employees. In theory, companies should want to share their retention data. If it's a good company to work for, people will want to stay. They should want to share their promotion data, in theory. If it's a company that hires good people and treats them well, those good people will ascend with mentorship and time. 70% of the S&P 500 currently share diversity and inclusion data at some level. 70%. Only 22% of Berkshire companies do, at any level. And only 4 Berkshire companies speak to workplace equity with any meaningful depth. Berkshire is a serious outlier here. Berkshire is famously decentralized. Its units operate independently. Yet, if an issue isn't conveyed as important from headquarters, can we expect it to be prioritized by an operating unit? Here's the thing. Mr. Buffett, Mr. Munger, the board members, and the team at headquarters, you may each individually, truly and genuinely hire, mentor, and promote the best people for the job, regardless of their gender, race, ethnicity, sexual orientation, or any immutable characteristic. But we can't conclude that this is the mindset of each of your employees, managers, and hiring directors. Berkshire headquarters can't sit passively and hope that their independent units are addressing bias and discrimination in their workplace. Active management, proactive attention is needed. In its statement in opposition to the proposal, the board said, Mr. Buffett, Berkshire's chairman and CEO, has set the tone at the top for Berkshire and its employees for over 50 years. It also states, Mr. Buffett has a record of opposing efforts, seen or unseen, to suppress diversity or religious inclusion. Mr. Buffett holds extraordinary influence over his own companies and over the broader business community. He opposes efforts to suppress diversity. Given that, we ask for him to step forward decisively, in his own inimitable words, in his own inimitable way, to detail how important diversity and inclusion is to his companies, the expectations he has, and the efforts he expects to see, the metrics that will be used to judge success. Actions speak louder than words, but silence here speaks volumes. Thank you.
Thank you. The proposal is now ready to be acted upon. Mr. Hamburg, when you are ready, you may provide the voting results disclosed in Ms. Amick's preliminary report.
Ms. Amick's report states that the ballot of the proxy holders in response to proxies that were received through last Thursday evening cast 124,842 votes for the motion and 391,662 votes against the motion. As the number of votes against the motion exceeds a majority of the number of votes of all Class A and Class B shares properly cast on the matter, the motion has failed. The certification required by Delaware law of the precise count of the votes will be placed with the minutes of this meeting.
Thank you, Mr. Hamburg. The proposal fails. Ms. Bosonic, yeah.
I move that this meeting be adjourned.
I second the motion to adjourn.
Motion to adjourn has been made and seconded. This meeting is adjourned, and I would just like to add one final comment that really hope, and I think the odds are very, very good that we get to hold this next year in Omaha, and I hope that we get a record turnout of Berkshire shareholders, and we really look forward to meeting you in Omaha. I guess it'll be next April 30th, but we'll be sure of that date a little later. So thank you for watching, and we will see you